I mean, from my point of view, on the Luxembourg side, where things are probably more heavily regulated and can take a little bit longer, we usually see time frames of 2, 3, sometimes 4 months, really between that decision. Okay, these are the guys that we're going to go for in terms of service providers, until okay, now we're ready to we have a fund. It's set up. It is registered for marketing. We can have a first closing. That's kind of that scope to be achieved, and the time frame, is 8 weeks, 12. Yeah. Very normal. Yeah, very normal. But that is also okay, because you as manager will need that time to be ready internally to have your processes set up, and you will not find your investors overnight. I mean, it's as simple as that. I mean,
I think there's a few things there, isn't there? There's legals, there's KYC, and the KYC on the client facilitates the KYC process within the bank account opening. Mm-hmm. So I think, we know those pain points. Yeah. And it comes back to the point, I guess, about onboarding and having that plan and knowing what the potential areas of exposure are there in terms of timeline.
That's right. And I think the frustrations can be avoided through the plan and communication. It's when people don't appreciate where are we up to, what are the delays, because things happen. Delays happen. But if everybody understands that we're waiting for this, we're doing that, it's not a problem what the next steps are. So the plan, having the project manager approach whereby somebody is running it for you, regular catch-ups, so you know exactly where you are, takes away the frustrations, even if the delay is there. And it doesn't have to be there. I'm not saying everything is always delayed.
I think our job is to try and avoid it.
Right? You try to avoid it.
Yeah, and we can sometimes catch up. We do things in parallel, which is something we try to do all the time.
Yeah, absolutely.
And that all comes from the plan, yeah.
Particularly the bank account opening process, which involves yet another entity outside of our control, right? I mean, we have full control over things like the service contracts, which need to be established, reviewed by the client, by their counsel, and so on. But I mean, that's something I think where we have a clear say on how long that's going to take. The banking provider that is going to open that bank account, it's a different KYC process where we obviously help. We have our choice of preferred providers that we can offer. However, we also need to have an open platform when our clients come with a preferred banking partner, maybe because they have run their US funds through that provider and they happen to have a European onshore presence. So I mean, that would be a logical choice. So then, we need to onboard with them as well, and that's usually something that we advise our clients to trigger sooner rather than later.
Absolutely. Yeah. Modern banking is relationship based, and so having that relationship and not using is just madness.
Yeah. I mean, one thing I think we try to do, right, is steer them towards banks that we know are quicker, if possible. But you're right, Thomas. If they have an existing relationship with a bank, it's going to help anyway. Absolutely. Right? Another question that we get a lot from first-time managers is around costs and trying to help them understand what those are going to be in totality. Certainly, when it comes to the services that we provide, they could be, as we said earlier on, 3 different services. If you're in an EU AIF with a sort of a marketing setup, and so you're looking at AIFM, you're looking at depository, you're looking at central administration. But then there are simpler structures, and then there are volumes that are involved. The volume of investors, the volume of investors. So I mean, how do we help clients get a feel for what that's going to be? And we can't always be exact, but what value can we add there?
I mean, there is no one size fits all pricing, right? I mean, you mentioned it: fund sizes, activity levels, complexity in the portfolio. I mean, those all play a role. I mean, think about investment structuring, right? I mean, talking to a fund manager the other day, and you find out they're planning to have a separate a holding structure per asset, which is not unusual. I mean, a portfolio of 10 or 20 assets, I mean, that quickly gets to a lot of work actually on the accounting side, on all these entities need to have annual accounts done, a tax declaration done, and all these things. So it does add up. And when you compare that to another fund that is much more straightforward, it becomes clear that you can't have that one pricing. So I think what we try to do at Ocorian is really understand the project, preempt those points where things might diverge between one fund and the other, and then find a fair pricing level that reflects that activity. And let's face it, the responsibility that we're taking for that for that vehicle. Now you still don't have a number for me, right? I mean, that's a little bit the hot topic in a way.
But on that, I mean, I think one bit of advice I've given to clients in the past is just because they're going to talk to more than one provider at that exploratory stage. I mean, just have a simple calculator, because there's a lot of those variable fees. Yeah. Some of our, competitors like to have a lot of variable fees. We tend to try and give a flat fee plus maybe, a basis point arrangement, but it varies, I guess, depending on the situation. But I mean, the variable fees can really accrue. So it's probably wise for a first-time manager to just develop a simple calculation tool
exactly.
that'll allow them to evaluate those
set out a
offers.
Standard set of assumption that you can share with the providers that you're talking with, so that you actually get something that you can compare as a cost afterwards.
Yeah, because obviously we have a pricing tool that we use internally, and that comes first and foremost from experience. What do we think you're going to need, even if you don't know you need it? And then we add in the dimensions over volume, and that comes to a expected price, which we're there to discuss. When somebody is looking for a service provider, I would suggest they look for that degree of transparency. Can they understand where the prices come from? Or have they just said, oh, that will be X, because that's what it always is. That isn't a bespoke service. We provide a service based on the services that you need.
Yeah, and then you want your clients to understand the pricing, and it's something that we spend some time on. For me, that certainty on both sides is definitely a real positive.